I spoke with the management of Geometric. I spoke with Mr. Manu Parpia, MD and CEO of Geometric Limited. I began by asking him about the growth in revenues that we saw, 4% in INR terms, but the engineering services were flat. Products and services did well. So my question was, why were the engineering services revenues flat, and what verticals did well in the second quarter?
I think in engineering services, we are finding that some of our customers are facing some challenges. So, whereas in software, we are seeing an increase in demand. So, engineering services, we are even looking ahead. We don't see that the figures will increase much. In fact, they might slightly decline. But as far as software services are concerned, we see a lot of traction.
What are the margins like in the engineering services division? If it slows, will it impact your margins?
So that's, in fact, if you look at the change in margins is brought about by 3 or 4 factors. One of them is the fact that the software services mix has increased. The mix of software services in the mix has increased. And the margin on software services is higher than that of engineering services, which also pulls up the margin. The other factors include, the number of employees has come down, utilization has gone up, and so on. So overall, it has led to a pretty decent increase in margin.
You signed deals worth about $12 million in the second quarter. What's the deal pipeline like, and what are clients saying about spending?
So, 2 points. The deal pipeline went up 23% quarter on quarter. So I feel pretty comfortable with the pipeline. Also, the average deal size has gone up. That is in the pipeline. So that's very positive. And customers are looking at, as I had indicated a couple of quarters earlier, in the software side, we really see that customers are having to or are indicating the increase in spending in the PLM sector. So I see there's a good demand in PLM. As they now are investing they had delayed investments for a long time, and now they see the need to upgrade their technology. So this gives us a good, decent opportunity.
PAT is up 20% sequentially. That's quite impressive. Is it due to high utilization, better pricing, the onshore-offshore mix? What are the factors that helped?
So I indicated that there are 3 or 4 factors. One is the change in the on-site-offshore mix. Second is the engineering services being a smaller percentage of total revenue, engineering services margins being lower. So that contributed. Number 3 is the fact that there is a decline in the number of people employed. And number 4 is the fact that utilization went up, partly driven by the decline in number of people, partly with more effective use of people.
But is pricing under pressure? Big IT firms have confirmed this.
We are not seeing, except for maybe one customer, we are not seeing, though it's a pretty large-sized customer, we are not seeing any demand for reduction in prices. Although, of course, increasing prices is a different ballgame. So overall, I don't see a huge pressure on pricing.
EBITDA was up 27% sequentially. What were your EBITDA margins like?
So if we look at the reason why EBITDA is higher is there are 2 factors. One is the contribution margin is up by 5 points. So that's pretty substantial. And the other factor is that we controlled our G&A as well as our sales and marketing costs. And then, of course, we did have this consultant fees this quarter, which will decline in the coming quarter substantially. So that ate part of the savings, but overall it still resulted in an improved EBITDA. And coming quarter, the consulting fees will be markedly less. So I believe we should see a further improvement in EBITDA.
But can you put a number on the EBITDA margins in the second quarter, and what is the outlook on margins ahead?
So what we have said is that in the quarters ahead, in constant currency terms, we would be in double digit in Q4. That's what we have predicted.
And can you tell us what's the guidance for FY16 growth?
Well, we have guided from both the continued improvement in margins as well as a modest growth in revenue. So, of course, let me be very clear, we won't see this kind of improvement in margins that you saw Q1 to Q2, but we should see some improvement in margins, and we should have a modest revenue growth. So that's what I would guide for rather than give exact figures.
So that was the management of Geometric telling us about what they're expecting in the quarters ahead. They are seeing a margin expansion, and they are saying that they're not facing big pricing pressure so far.